Welcome back. Mitch Argon with County-Lever Realty here. I want to chat with you guys for just a few minutes about current market conditions as of February 2021 and ask the question and maybe give some rhetorical answers of, are we in a real estate bubble? Let's get started. Okay, so I'd like to review these numbers with my team, and I think it's good to know what's going on region-wide, independent of what market you're specifically focused on, because people do move around so much within the region, typically on the buy side especially. So here's a chart that you can take a look at. This shows the median price in January for all of what I consider the submarkets in Northern Nevada. Pretty healthy numbers. Of note, Dayton has a new median price high of $386,000. Far right column, guys, I get asked a lot, what's the price appreciation rate? And it changes quite a bit from month to month, just as the markets change. So I like to use a better reference point, which is the last 6 months. So that far right column is the last 6 months, an average of the rate of appreciation of the last 6 months. And you can see it stabilizes down. We're in basically low to mid single digits with the exception of Dayton, which is at 9%. Even though it was a 17% increase in January of 2021 with the median high price, it is the last 6 months has been appreciating at 9%. So far right column gives you your number as to really what's going on region-wide on a market-by-market basis. When you take a little bit bigger picture here, and we look at homes sold and month supply of inventory, major factors in the market right now, of course, we know that inventory is extremely tight. You can see that Sparks is leading the way at the bottom at 0.1 month supply of inventory. This is for stick-built homes only. That's 3 days. So no new listings in Sparks in 3 days, and we're out of houses to sell. You come down the bottom, you can see the Tahoe market is at 1.4 months, which is the highest that we have for all these submarkets. But notice that it's down from 4.9 months in February of last year. That's a pre-pandemic number. So major changes in Tahoe. With increased demand and buying activity, primarily related to work from home. Okay, we get asked a lot, are we in a bubble? Is the bubble going to burst? If I buy now, am I going to be penalized? Am I going to see the market crash? This is a chart that is a really good reference point for you as an agent to basically frame your conversation with a client when they ask if we're in a bubble or is the market going to crash. The red line is a straight line, and that red line shows a 1% per quarter, which is a little over 4% annual appreciation. And this goes back to January of 2000, and we had that same rate of appreciation actually between 1995 and about 2002. It wasn't until 2002 that our markets locally started to really rapidly rise and fall, as we've been dealing with for almost 20 years now. So you'll note that in Q3 of 2005, we had the spike in median price. It reached 355 grand. That was 82% higher than the red line. It's just right over here, 82% higher. The crash came, we came down, we bottomed out in 2012 at 43% below the red line. And we are currently, as of fourth quarter of last year, at 26% above the red line. You can see that we've had a pretty good spike here over the last year as well in that pricing. So to put this into context, we are currently 26% over this red line. 2005, we were 82% over the red line. What's different regionally? What's different in the real estate market? Well, our region has a lot more going on in terms of regional diversification and workforce diversification. You know, in 2005, we didn't have Apple, Tesla, Panasonic, Google, even the Walmart distribution center. I'm not even sure if the Amazon distribution center was here in 2005. So there's been a tremendous amount of economic diversification in our region since 2005. The other big factor, which is really a national phenomenon, is lending standards in 2005 were, if you can steam a mirror, you can get a loan. As we know, lending standards today are much, much tougher. They really haven't loosened up any since they got fixed based on the last big recession we had. So I think the market today is a more supportable and a stronger 26% above where we are relative to a pretty weak 82% in terms of what was really holding us up back in 2005. So I think if someone's thinking longer term, they're going to be in a home for 10, 15, 20 years, this is probably fine to be buying right now. Will the markets potentially go down a little bit? Will they go up? Yeah, they're always going to be going up and down. But I don't think we're on the verge of the same cliff that we saw happen from 2005 to 2012, just based on what we see here numerically and what we know about what's happening in the region. So look, guys, I hope this has been helpful for you. This chart that you're looking at here is in the Greater Reno Tahoe Real Estate Report. It's just one of many charts we publish on a monthly basis. This one gets updated quarterly. Hope this has been great. If you have any questions, please feel free to reach out. This is Mitch Argon with Count Lever Realty, signing off. Have a great day.